Hey guys, what's up? This is Andrew for TrendLineses.com. So for those who are watching my video for the first time, let me quickly introduce myself. I've been working as a professional trader for the past 6 years in Hong Kong, and right now I do some YouTube videos because I think that it's very interesting for you guys to actually see how professional traders are making money on the market and what kind of tools and techniques we use to set up our trades. And in my videos, I want to show you how to do it yourself. And I'm only going to show you what is really working for me. And for those who are watching my video for some time, you actually know that I've been pretty spot on every asset I cover, or stock or crypto. And in this video, I want to make a massive update, guys, on AMC. And as usual, show you all the different scenarios that can happen using my forecasting tools and show you how to select the best one. Let's get into it. Alright guys, so we had a pretty strong day yesterday on AMC, plus 18%, plus 22%, sorry, and aftermarket was very strong as well. So very quickly, let me remind you here the situation. So we went to 35. This is a level I was calling, guys, for, a very long time, around 2 months. And I told you in the past 3 weeks, you can go and check my videos, that we are in the third wave. So I'm talking about this wave here, guys. 1, 2, 3. We're on this wave. We don't know where it's going right now. I'm going to show you all the different scenarios, and I'm going to show you guys what you really want to see is basically what you need to do right now if you have some AMC shares. And so, yeah, we are in the third wave. We went to 35 as expected. We got rejected to 26 as expected. And so right now, let's see what can happen. One technique I really like to use, so I'm going to give you here something that, pro traders actually do a lot, is to use a trading stop loss. All right. So if you have AMC shares, so I know you guys don't like to sell, but maybe some of you are considering where to take some profits, or maybe, to reload maybe lower. And here you can see that, when you have those strong moves up, you always have something. It can be a trend line or moving average that is supporting the price very well. And in this case, it's the 20 period moving average on the hourly time frame. You can see that in the past week, we had 1, 2, 3, 4 reactions. This one counts, guys, because, for a support to be broken, you need to have 2 consecutive candles that are closing below it. So here we didn't have it. So okay, here we had a bit of excess, but this was after market. So, it's not really to be taken into account. And to choose your moving average, you can have a look as well at the past. And something that was working well in the past is usually going to give you very good signals again. And here, for example, during the strong move up we had in January, you can see that the 20 period moving average was actually acting as support very well during this whole move up as well. And it actually allowed you guys to keep your shares to very high levels. So here, as long as we are above this moving average, guys, we are bullish. So let's see what the price action is going to show us. But this is one signal, very short-term signal, that you can use to exit your position if you want to. Then let me make here the different scenarios, because once again, guys, the way I found 35 and the way I actually showed you all the signals that the third wave is coming is basically by using trend lines and ELLIOTT wave principle, associated as well with Fibonacci retracement and extensions. And here I'm going to keep using the same techniques that worked once. So when something is working, it's usually keeping working. So here, let's do some ELLIOTT wave counting. So the first thing I want to show you, and I'm going to build the different scenarios with you guys. So on the hourly time frame, we're going to start to count what we're having here. And we're going to see what we can have. So here, 1, 2. Then here I can make 1, 2, 3, 4, 5. So this is a 3. Okay. So in one of the scenarios, we are having something like this. All right. This is the most bullish scenario, but when I see the price action in the, that happened on Tuesday, especially what happened in the aftermarket, which means that a lot of market makers need to buy, maybe hedge funds, I don't know, but some big clients, some big institutional clients or hedge funds needed to buy AMC shares, not to be left short, probably because they were short. When you have so strong moves in after hours, it means that some big players are short, and probably because of the gamma in this case. And here we're wondering how high this can go, because as I told you, you can follow a trailing stop loss, or you can also try to find some targets and take your profits once you reach the target. So here, to know where this fifth wave might go, we just measure the third wave, apply it to the bottom of the fourth wave, and it gives us some levels. The 1.618 is the most common Fib extension level. So we put it here. All right, first scenario. Then I'm going to do the same thing, but I'm going to consider that actually this purple wave is complete. All right, so that the 1, 2, 3, 4, 5 is actually inside it. I'm going to consider we're having something like this, which is possible as well, guys, because we don't know exactly what is playing out. That's why we need to have some signals, some indicators that are going to give us those early signals that things are changing. So here, let's keep this one like this, and let's make another one. So 1, 2, 3. So now we imagine this one is complete. Let me put it in a different color. So if this is playing out, then it means that the correction is going to be a bit longer, and that here probably you see we have this ABC pattern. We might have a flat, because as you know, guys, in fourth wave, we might have zigzag, flat, or triangle patterns. This cannot be a triangle. This cannot be a zigzag. So the only thing it can be is a flat. All right. So this is possible, especially we had a zigzag here. So usually when second waves are zigzag, fourth waves are flats. So here, this is another scenario. And if I measure the third wave here, so this time is this one, it's going to bring me to slightly higher levels. So I do the same thing, 1.618. So this time is 66. And then I keep doing this, guys, on a larger degree wave counting, because once again, I don't know if this wave is complete or not. All right, 3. Okay, then if it's this one, which means that this one is complete, which is very unlikely, but it's possible as well. I think most likely we're going to have something like this for this one. So it's going to be very interesting to see where this third wave here is actually going, because once we know where it's going, we can actually predict better where the fourth wave retracement might go before the fifth wave arrives. So for now, let's assume that it's complete, because this is as well a possibility, guys. It's very unlikely. This scenario is very unlikely given the strong rebound that we had here. All right, it really looks like here something more is playing out, but I'm still going to give you this scenario because I think it's interesting, but we can already almost eliminate this one. And same thing, and then I'm going to measure the third wave up, and then I'm not sure where I'm going to apply it. All right, so it really depends. If we correct only to here, it brings me to higher levels. So I'm not sure where we're going to correct. I'm not sure exactly if this is still on the table or not. We might have, some kind of a triangle maybe here in the fourth wave. Then it would mean that this third wave here, so let me put it in a different color. The third wave of the blue 5-wave development would actually be complete, which is to me hard to believe, because I can still find some counting where it works. For example, this one. Okay, so then it could be complete, but guys, to be honest, it doesn't look good. It doesn't fit well. So this is how you eliminate some of the scenarios. So I don't think actually this one is on the table, but even if it is, we still go to 70, guys. So it's important to notice. And let me show you the last one. Up. All right, then this one would probably correct deeper. No choice. Okay. So if this one is playing out, because here we have a 1, 2 as well, then guys, measure the third wave, and I apply it to the bottom of the fourth wave, and then it brings me to, 65 as well. So I gave you here 4 scenarios. Number 4 and 3, let me put it maybe in a different purple. And this scenario, guys, are very unlikely because they would mean that this one and this one are off the table. And what I see here, so let me just show you guys here. What I see here with this strong move up is that something more is playing out here, that this move is not complete, and that we actually gonna break 35 maybe this week and go higher. So I'm gonna give you here one more technique to actually know before it happens when the market is actually going to shift. So you need to find some reversal signs. So once again, you can see, for example, some bearish divergences, but here you won't have those. I'm not going to go through what is a divergence with you guys, but those who are watching my videos for some time know that it's actually very trustful signals that I used here to predict as well the bullish momentum that started here. So we're not going to use those here. They're not applying in this situation, but you can use, for example, some candlestick reversal patterns. So I'm going to show you better to do this on a daily time frame. So let me maybe get rid of my countings. And here, for example, you're looking, for example, bearish engulfing pattern. So it's, for example, a candle that is going to eat this candle completely, a bearish red candle, or you can find, some island reversal. So this, for example, is an island reversal, is when you have an isolated candle alone above. So let me show you what is an island reversal. Okay, so an island reversal is something like this. When you have some isolated candles, with some gap up here and gap down here, that actually show you that there were some buyers that got stuck here. So that's why it's an island. You have those three candles alone, and it's a very powerful reversal patterns. So this is the kind of things you can look for. But most importantly, when you have so strong moves up, guys, it takes time before the reversal actually happens. And usually you have a lot of red days before the real reversal happens. So you can take your time and check if those red days are happening. Here, for example, we had one. This one is not good. All right. It means the market opens with a lot of bullish momentum, and that sellers right away seize the opportunity to sell their shares. So this is not a good signal, but here we had a green day coming right away. You can see, for example, guys, it's very, we have a beautiful example on AMC just a few months ago. And you can see, guys, for example, here we had this red day, followed by this red day, and, 5 red days in a row. And you can see each time the market was opening high and closing lower. So this is a bearish sign. And this was actually what I was really watching, if, the market is able to close higher than the level it actually opened. And we did it on Tuesday's session. So this is very good. And this is why I think that those scenarios that I had here, are actually really on the table, guys, because we had one more strong day. That shows that the market still wants to develop higher. Right now, let me show you guys some very interesting data. So for those who are watching my video for some time, you know that I like to keep an eye on the option market, because actually, guys, this is what created those strong moves up. We had a gamma squeeze, guys. We had a gamma squeeze because you can see here I'm actually having all the strikes of all the maturities, guys. I take all the maturities, June, July, September, Jan 22, Jan 23. I take all the open interest. I multiply this by 100 and by the price level and the delta. All right. So to compute the delta, I use this formula, guys, that is here. I'm not going to go through this again here with you, but I basically compute all the synthetic short position exposure. And as of Friday, AMC was at 26. So we had 1.7 billion USD short exposure on AMC. And now we are at 37, guys. So you can see we go from 1.7 billion to 3 billion, guys. This is what is called the gamma. All right. The higher AMC goes, the more shares market makers need to buy. Right now, they need to buy 82 million shares, guys. 18% of the total share float, which is a lot. And you can see here that we're having some very, very heavy open interest on the 40 strike. And guys, now we opened the new strikes, we go up to 70. So they just opened yesterday. So for now, we don't have any exposure here, nothing. And remember, guys, I was telling you that, this is a very bullish sign, that this is what can create a gamma squeeze. If you don't have those very big positions on the upside calls, it's going to be hard for the market to actually, gamma squeeze like it just did. And right now, we don't have any positions here because those strikes are new listed strikes, but I'm going to keep an eye on this. I'm going to follow this very closely. If we see on the 70 strike, some very big positions starting to be built, then it means, guys, that this is going to happen again. So this is a very good indicator to watch, and I'm going to keep an eye on this for you. Another indicator that I like to watch is the volatility. And right now you can see I was checking the 40 strike volatility. So it's the one that I have here of the 40 strike, where we have 32 million shares equivalent, guys. So it's really a lot. And this volatility is of course at very high levels because AMC is moving a lot every day. But I'm also going to keep an eye now on the 70 strike call. And if I see that this is, going higher suddenly, it's a signal that market makers are actually using protection against those strikes, which means that they're going to buy shares if AMC goes higher. So it's another indicator that I like to use. All right, guys, so that's it for me. I hope you enjoyed this video. I tried here to sum up all the situations. So I remind you that I have, different scenarios that are here, and that as long as we stay above the 20 period moving average, we are bullish. We are probably going to 65. I'm not sure if it's this week, next month. We need to follow this. We are looking for reversal patterns that are going to tell us if maybe we are shifting momentum or not. We're also looking for those red days that we don't want to see, but if we see too many of those, we know that the market is going to shift soon as well. And we keep an eye on the option market that is actually telling us if yes or not a gamma squeeze is likely to happen again and push AMC to even higher levels. So I hope you enjoyed this video, and if you did, please don't forget to click on the sub, like, and bell button so you're going to be the first to know when I upload anything new. And stay close to shore. I see you guys.